big shift out of overpriced U.S. stocks and back into Europe and some emerging markets, even China, where just on relative terms, the valuations are less stretched than they have been in the U.S. So I think that my characterization is we're going to ratchet downward in the stock market for a while. I think that when all is said and done, 2025 will give us a year like we had in 2022, where we had a 20% drop in the S&P 500, about a one-third drop in the NASDAQ. We could match that more or less this year, but it won't mean that the world has come to an end. It won't mean the markets are liquid. It will mean that we started from a place that was stupid when you look at some of the valuations at the peak of the S&P and the NASDAQ. And as a benefit, and this also happened, as you remember, in 2022, as a benefit, there will be some sectors that do well as the money comes out of the areas with stupid prices and into the areas with stupid prices and completely the other direction, that they're just too cheap. And I think some of those will be commodity stories. Some of those will be precious metal stocks, the ones that deserve it, as they catch up finally to the moves in gold primarily and silver secondarily. So I think it's going to be a great year for stock and sector pickers. If you're a passive investor in an S&P ETF, you're not going to have a good year.
I know when I talked to you in December, you said your theory or mantra for the year was, does the math make sense? So, what is some of the math that's making sense to you? I know you talked a little bit about uranium and natural gas, but like, where are you seeing these opportunities on the commodities or energy space? Like, are you looking at the explorers, discovery stories? Are you looking at producers and all these things? Like, as far as looking at the mining markets, like where is the math that you're seeing right now?
Well, look, the math generally favors gold. I think it favors silver more than the market has acknowledged. It favors fossil fuels. It favors uranium. In some isolated areas where you've got unique one-off stories, like whether it's antimony, titanium, tungsten, those are some commodities that are in perilously short supply in North America for our needs. And I think those one-off stories are good. But otherwise, I think that the math, where it comes to base metals and even battery metals generally, is still not favorable enough. You're going to have public policy and financing changes, like I've been suggesting. You're going to have, I think, a come to Jesus moment on the part of policymakers to, either, again, like I said about Europe, either you're going to put everything in place that you need to reinvigorate your local industries, or just shut up, hold your nose, and buy the cheap imports. This can't be done just with permitting reform. So I think the math favors some of those favorites I've mentioned because of the more extreme monetary or supply and demand things. I'll tell you where the math is going to catch up with the markets broadly, and it already is that President Trump came into office down here with a lot of promises that there's no earthly way he can keep them. Now, that's not unusual for politicians. They all do that. There's no exceptions to that rule. They get into office and realize, like Bill Clinton famously did, holy cow, there's such a thing as the bond market. That if the bond market rebels around, against our policies, we might have to change them. Well, guess what? President Trump is finding that out already, and he's going to find it out increasingly as the year goes on. Because we are likely, thanks to what Trump just approved out of the House and the Senate, we are likely to end fiscal year 2025 with a deficit that equals or exceeds the last full year fiscal deficit under Joe Biden. It's not going to it's not going to make MAGA land very happy. It's not going to make the bond market very happy because here again, you've still got a culture in Washington that I think President Trump is sincere, and certainly Elon Musk is sincere in trying to change. But the bond market in the recent past, when you've had a 10+% correction in the S&P 500 at the worst point, closer to 15 for the NASDAQ, you didn't get a whole lot of running to the exits by way of the bond market for that. The bond market yield on a 10-year treasury should have dropped more than it did. And it's rebounded in the last few days as you and I are recording this. So the Fed may impact those with its decision this week. But look, until fiscal houses are put in order, most of all here in the US, the math is going to be very much against Trump's agenda of wanting to cut taxes further, uh, to extend and make permanent his tax cut policies from 2017, to do all the other stuff he says he wants to do, and think he's going to pay with it through deregulation and Doge's efforts and by drill baby drill. It's a fantasy. The math does not work for any of that stuff, and especially on the whole Doge thing. Do you realize? I don't know if this has been covered that much in the Canadian press. Do you realize that for all of these savings, 150 million or 80 million and counting, whatever, that Elon Musk identified with his initial efforts, the Republican Congress and President Trump just nullified every dime of it pretty much with their
Wow.
continuing resolution. And since they can't muster the will and the votes to legitimately cut spending, and they extended all of the spending, it very close to almost identical with a few minor exceptions to the levels of last year. They just did away with all of those cuts that Musk identified. They said, okay, well, nice job, Elon, but we can't figure out how to come to an agreement on a real budget. So we're just going to kick the can down the road again to the end of this current fiscal year, and we're going to fund everything at essentially what it was last year. So this guy's wasted his time on the surface, you know. And in the Senate down here, Senator Rand Paul of Kentucky, where it comes specifically to foreign aid, wanted to prove that the Republicans in the Senate even aren't really serious about reducing deficits, because he said, okay, for the moment, let's just pass this measure that locks in the Doge cuts just where it comes to foreign aid. We can argue about the rest of it later. And half the Republicans in the Senate oppose that because they still have a culture that they want all of that U.S. money going to other lands for either laundering purposes or to keep our mitts on other countries where we should be getting out of them. So that's the one area, pardon the, you didn't expect that this answer necessarily, but this is the area where the math is really going to be merciless to Trump and the Republicans, is if they don't show a lot more seriousness about truly cutting the size of government. Interest rates are going to go up, inflation is going to go back up, and by the time we get to the midterms, they're all going to be worse.